Hello trade pros and welcome to another YouTube video from TRADEPRO Academy. My name is George. Today I'm going to be talking to you about tips that no one tells you when you're backtesting your trading strategy. Yeah, we all know we could put it into a software and get some results and have confidence on the back of that. But you got to make sure the way that you approach your backtesting is just as intricately thought out as the strategy that you will be backtesting. I'm going to cover a few tips for you to keep in mind when you're backtesting your trading system. Let's dive right in. And before we begin, please remember to hit the like button and subscribe and hit the notifications bell up there somewhere to be alerted every time we have new content that comes out. Let's dive in, guys. All right, so here's the thing. You can really backtest a trading strategy very simply these days. Any software that you're trading on or charting your assets of choice is going to have functionality to help you backtest. From as simple as TradingView to some more complex software is dedicated just for backtesting your strategy. So this video isn't really about that because it's free for a lot of these platforms. It's easy to do, and it's something that you can just do by yourself. What I'm going to teach you today is how to actually backtest your strategy. So here's tip number one. When you're backtesting your strategy, make sure that before you even begin, you're matching your actual strategy to your trading style. Too often, people who can't be day trading are out there because they might have a job full-time or they're doing other things. But people who can't day trade are actually backtesting day trading strategies. Regardless of what the results are, the fact is you probably can't execute that strategy anyways. So what you want to do is to backtest the style of strategy and to find one that works for you. Another thing you want to keep in mind is, are you going to be doing automated trading? That is, are you going to run a robot that does this strategy for you? Or are you going to be the one that actually hands-on executes it? And this is an important differentiation because if you have an automated strategy, it makes sense to backtest it with an automated software. But if you're going to be executing the trades, you're ignoring an important factor when you backtest with software, and that's you. So if you're going to be manually trading, the way to backtest is to actually go back in time and execute the trades manually yourself. Because sure, it's going to take a little bit longer, but the results are going to be more indicative of what your performance is going to be like once you actually start trading that strategy. So that's what I mean by matching it to your style. Don't go for an automated backtesting software if you're not planning to run an automated system. You're always going to learn more about yourself, your strategy, and how feasible it is that you're going to make money with it by matching the type of trading you're going to be doing to your backtesting. Oftentimes, doing it manually takes the longest, but it gives you the most powerful learning lessons. Even if the strategy doesn't work, you could carry forward to your next strategy you're developing. That's tip number one. Tip number two is to stress test that strategy through crashes. Too often, I see people backtesting in the most optimistic periods. If you're going to test a strategy in the most bullish market, that's great, but it's a bullish market strategy, and you need to know that. And if you have a bullish market and bearish market and a neutral range-bound strategy, that's fantastic. But you can't expect your strategy to perform in all conditions, especially if you haven't tested in those conditions. I recommend testing these years out, 2008 and 9, and before that, 2000 and 2001. So then 2008 and 9, like I mentioned. 2016, there was a big crash in the China currency devaluation, and most recently in the pandemic with COVID. So backtest your strategy through the crashes and the enormous down sessions because that's where you're going to learn a lot about your risk. And if you ignore that aspect, you might start right at the peak of the market and then experience a downside and lose a ton of money that you could have prevented. So that's tip number two. Make sure you also stress test whatever you're planning to trade through crash periods so you know how it performs. Tip number three is to test these three periods separately. If you just create a strategy and turn it on from January 1st to December 31st, you're going to get information, but it's pretty useless because that information actually breaks down into three sub-periods. Every single year has three separate sessions that take place. The first session is from May to July. There's a saying, sell in May and go away. That's because markets are quieter, more rotational or sideways based. It's a range market, and in that moment, you lose some of the opportunity for momentum type trading. So backtest your strategy in that period and know how it performs in a range bound market. If it's horrible, but it does well in the other periods, you can just turn it off during range markets and find one that's specifically designed for that period of time. But you need to know how it performs in slow conditions, or else when you get to those moments, you could be losing a lot of money that you don't need to. The second period is August to September. Most of the crashes that have happened in the past have happened in that period. In fact, on a 30-year seasonality, markets are only negative those 2 months, August and September. And that's the stock market, obviously. So during that period is where you're going to take the most heat to the downside. And so if you have an ultra bullish strategy, pay particular attention to that time period. And the last period on an annual basis is from October to April. These are extremely bullish months, and markets on a seasonal average of 30 years do nothing but go up, and a significant amount as well. So this is where you want to put in your most bullish parameters and your most bullish strategies. So with these 3 periods, find out, is your strategy good enough to withstand all 3? And if it's not, it's going to perform better in one of them. And you maximize it during that time period. And in the meanwhile, develop 2 other strategies for the other seasonal months of the year. Tip number 4, you want to live trade the worst results of your strategy manually. So let's say you backtest something and you find out that between the month of May to June, it had the biggest drawdowns, the most horrific and scary losses. Instead of avoiding that and saying, well, I'll deal with it when it comes up, go in there, roll up your sleeves, get down and get dirty. Trade those sessions manually. Go back to the time it starts performing badly until the time that it ends performing badly, and do those trades manually, meaning that you could advance the chart by hitting the next bar or hit play in the simulator, whatever access you have to your software, but be sure to be at the controls during that time period. It does 2 things for you. Number 1, you learn how it performs, and number 2, you get to experience the worst of it, so when it happens in real time, you're prepared to take action and not paralyzed by the volatility and fear that often accompanies these downside markets. Tip number 5, look at your losing trades only and see if you could optimize some of your profits. Here's what happens. A lot of times you'll get stopped out on a trade and it'll go your way and rip 30 points. Oftentimes that frustrates traders. I could totally understand. It happens to me too. But what you need to do is look at the losing trades and find out if you're getting stopped out by 1 or 2 ticks and your trade then immediately turns and goes in your direction. Maybe there's an opportunity to move your stop loss to be able to capture that extra opportunity that you miss out on because you're stopped out. If you find you move your stop loss and it generates losses, then tighten it back up. So what I'm talking about here is just looking at only your losing trades in the back test and identify if you could, with a little additional risk, be able to capture that profit when you run the retesting of that strategy. And the last tip for you here, number 6, and I see so many traders miss out on this, is after you backtest a strategy, test it live and test it small. I know it's exciting. If you found a strategy that works, that's generating an edge and a return over a period of time, the excitement of making the kind of money that you're seeing on your performance from the simulated backtesting, it can get you excited. Obviously, you want to make as much money as quickly as possible. It's human nature. However, remember this, when you're starting live, you're really introducing human emotion, human psychology, all right, emotional trading, and how you deal with money and loss is going to be really manifested into your trading as well. So to give you a chance to get started and have a chance to really run the strategy in the long term, start small as possible. If that's 1 contract, 1 share, all right, 1 pip, whatever it is, or 1 micro lot rather on Forex, whatever you're trading, it's okay. Trade it at the minimal quantity. Find some success with little risk and obviously little profit. And as you start to see and replicate the strategy backtesting performance, you can give yourself a reward by increasing your scale. It's always easy to add scale to a winning strategy than it is having to reduce it because it's generating enormous losses. Believe me, I've been there and done that as well. So hopefully you guys enjoyed these 6 tips. I think they're gold for your backtesting. It's important that not only do you backtest a strategy after you come up with it, but you know how to backtest it. These are the things that I didn't really see much information out there on that I wanted to bring to you. Hope you enjoyed this video. I'd love to hear how your backtesting results went. Please pop it in the comment section if you have any questions, comments. If you want to share some of the numbers, I'd love to take a look and give you some feedback as well. Take advantage of this opportunity, chat in the comment section below, and I'll talk to you there. Thank you for watching the video. Remember, hit the like button, share it with anyone who you think would find it valuable, and subscribe to the channel and hit the notifications bell to receive updates for upcoming content. That's it, trade pros. Thank you for watching. Wish you the very best. Manage that risk. Trade like a trade pro. I'll see you later. Thank you and goodbye. And now we have a Formula One qualifier to watch. That's why I rushed it. I only had one take.